Hello, Hamish here from Mortgages Online. I've got Dev with me. We are talking about a very, very interesting topic, Dev. It's about your mortgage and getting rid of it faster. But it's a bit more detailed than the usual one because we're going to use an example, a couple, and what we're going to do is see what happens if they use nearly every cent they have left over at the end of the month.
So I mean, after all my expenses
and the mortgage. Every cent you've got left over after that, if you use that towards making extra payments into your home loan, optional extra payments, what that would do to the term. That's what we're going to look at. So just to give a little bit of a background, this couple is one person's on 95 grand, the other person's on 100 grand.
Yeah.
In terms of expenses, I've gone deep, deeper than normal. I've tried to put in a lot of things in here, right? Your day-to-day stuff, grocery bills, insurance.
Hang on a second. Have you factored that I need to upgrade a car every 5 years or 7 years and maybe a holiday?
Yes, I have put here that you need to update your car maybe every 7 years, say, for your wife, and then 15 grand for your one every 10 years. And a holiday, maybe a trip back to India.
Okay.
Up to...
every three.
Up north of India.
Yep.
Every 3 years. So all of that is in there. Now, what happens to the mortgage if you use all the surplus, right? And this person here in this example would have about 27 grand or something surplus. Mm-hmm. That when I say surplus, you probably are finding ways to spend that, this couple, right? But what would it do to your mortgage? So if that person applied that, this is a track that the mortgage would go through. Right, and remember what we're looking at are a couple that is basically 37 and 39, so 40 and a 37. So this track, what it means is within 10 years, that home loan, and we started with a home loan of 800 grand, as you can tell.
As of today,
that will drop down to about 470.
Interesting,
right, in 10 years.
Oh.
Now, about 18, just over 18 years to 18 and a half years, you'd be mortgage free.
Wow.
Yeah. If you then save that amount and put it towards your savings for retirement by 65.
So that means 18 years from now and then start putting that extra surplus into the savings.
Yep. And so by about retirement age, this person would have about $1 million. That also includes KiwiSaver, which I have taken out here as well. Okay. In the expenses, right? Wow. So $1 million in the bank and your mortgage paid off by retirement age doesn't sound bad, right?
How much interest it would save, roughly?
That's a good point. So compared to a normal 30-year home loan, if this couple chucked nearly every penny into the mortgage, it would be about 400 grand in savings. I keep saying nearly every cent because what I have done is here we're using 90% of the surplus towards this home loan, right? So yeah, this is kind of the trajectory. Now, this interesting thing is here, Dev, is that we now have this tool available. We can do a personalized calculation for you if you like. We're running a little pilot scheme, and it is going to be free of charge to begin with for the next month for our existing clients, maybe, and then at some point we might need to change that. But if you want to jump on early, let us know, and we'll see if we can do a promotional, like a free
initial consultation.
Into this and into a more personalized budget for yourself.
Thanks for watching.
Yeah, thanks for watching.